Good afternoon, everyone, and welcome to the launch of this report, Economic Complexity and Diversification, a report that was commissioned by AIFC last year and prepared by the Harvard Growth Labs. And it's a fascinating piece of work which we'll take you through this afternoon. Before we get started, I have a couple of announcements. Firstly, for those who haven't joined the AIFC Telegram channel, please do so. There's a QR code on the back of your name tags. Secondly, I'd like to thank very much our gold sponsors, Visa, Freedom Holdings and ITS, who've made this AFD possible. And finally, if there is an emergency, it's very clear in this room, there's only one way out, which is there, and then through the front doors that are reasonably obvious. Before Dania, who's the Chief Product Officer, takes you through the report or the highlights of the report, I'd just like to give you a bit of perspective. So my role over the last couple of months has been helping refresh AIFC's strategy, and our focus has been always on a number of different areas, but now we're much more focused around two key areas in particular. One is facilitating foreign direct investment, and the second is developing the capital markets. And both of those are focused around or geared towards attracting investment into Kazakhstan. And the obvious question is, which industries, which sectors do you want to invest in? And one of the observations we had going through that process, of course, is that competition for investment is increasing around the world, particularly as interest rates go up. And secondly, that investors are being much more selective about what industries or sectors or businesses that they invest in. And that second point is the topic of this report. But before we get into that, just a couple of pieces of historical information to set the context. Firstly, if we look at the economic development of Kazakhstan over the last 20 years, clearly FDI has had a big role in that development. I think FDI last year was $26 billion. But what is also clear is that FDI has been focused on a small number of sectors, two in particular, the extractive industries, so it's oil and gas, and metals and mining. And at its peak, that FDI was around 77% of total foreign direct investment in Kazakhstan, and never over the last 20 years has it been less than 50%. So yes, the country's attracting FDI, but it is in very select parts of the economy. The second thing, which will be no surprise to those who are familiar with Kazakhstan, is that those industries which account for most of Kazakhstan's exports, more than 80%, are very linked to the commodity cycle. And in particular, as oil prices increase, the economy goes through a period of growth. And that period of growth is partly on the back of commodity prices, that's a primary driver, but the work that the Harvard Growth Lab did indicates, which again I think is relatively obvious, that the services sector of the economy is also very exposed to the oil price. When there's lots of activity in the export sector, you get lots of domestic activity in terms of services as well. So Kazakhstan's an economy which is very correlated with the oil price. And that's obviously something that the government has been trying to diversify away from over many years. However, those efforts have been relatively unsuccessful. If we look at the non-oil and gas or metals and mining exports, they've remained relatively flat and very small over the last 20 years, around $500 per capita US of GDP. So, and if you look at that $500, then that is all in industries, primarily agriculture, that existed before the year 2000. So we've been relatively unsuccessful at attracting foreign capital into new industry sectors, hence the topic of the report. The second thing of background information is, what drives economic development? And historically, there was a pattern of economic development which said you had an underdeveloped country, you'd raise productivity through firstly basic manufacturing and then more complex manufacturing, and this would lift productivity, lift incomes, and move into a developed country status. Recently that sort of hypothesis around economic development has been challenged. And last year there was an article in one of the American economic journals about how countries develop. And their hypothesis is that actually this is not the way it has occurred in the past. It's certainly true for East Asia and China in particular, where you had economic development that was fueled by manufacturing. But their hypothesis is that, of course, when that occurs, and we can certainly see that in China, it drives up commodity prices. So if you're a commodity exporter like Kazakhstan or some of the countries in Africa or South and Central America, then obviously you get an uplift in economic growth because commodity prices go up. But you don't actually create a manufacturing sector. And this is essentially what we see in Kazakhstan. And finally, and this is very important because it started to shape how AIFC thinks about strategy, is that the World Bank published as part of its economic outlook this year a chapter on foreign direct investment. And one of the elements that they noted, which is we've also noticed, and anyone who follows this will know, is foreign direct investment is declining globally. Countries are less willing to invest offshore than they have been in the past. Simplistically, globalisation is declining. What controversially they also said is that FDI is becoming much more fragmented. And in fact, geopolitics is driving a lot of that FDI now. So countries are willing to invest in countries that they are politically aligned to. And secondly, it's very important what sectors they invest in, what they call strategic sectors. So when we think about foreign direct investment into Kazakhstan going forward, the obvious thing is that we need to think about investment from countries where we're aligned, and you would have or may be aware that AOFC has been relatively selective going forward on the geographies that we're seeking investment from, but also the industry sectors that we want investment into. And that's all about AOFC's strategy now, being much more selective about where we spend our resources in order to have the maximum upside for investment into Kazakhstan. So that's a reasonably long introduction, and as Danya takes you through the report though, it's very on point to what we're trying to achieve here, which is what specific sectors or what specific industries or parts of industries should we be seeking foreign investment into in order to drive or get the maximum value in terms of economic growth. So I hope you find this report interesting. Danya is going to take you through, I don't know, 20 or so minutes of the highlights, and then we'll open up for questions. Danya.
Thank you very much, Tim. And thank you for setting the scene for this report. Now, if we go to the report itself. Okay, here we go. So, as Tim mentioned, so basically what is economic complexity? They actually look at how sophisticated is the product and which products are being exported. So the average exported product, how sophisticated it is. And it is very much correlated with the GDP per capita, or per se the income. So that means the higher the sophisticated products the country exports, the higher the income of the country. And we can see that the top 5 leading countries in accordance with the economic complexity, Kazakhstan is ranked 81st, that is as per 2019. This is a very much similar slide, I'll skip. So what we see is that now if we zoom in, we see that Kazakhstan is slightly above this curve, and that means there are 2 ways. Usually in the long term you pull back to this curve, and that means either the incomes might drop, which no one wants to have such scenario, and therefore we have to push for improving the export diversification, sophistication, and move towards more complex products. So this is the only way to achieve long-term sustainable economic development. And I mean, most of you are very much familiar with this graph. Kazakhstan has gone through, I would say, high growth years in the first 7 years, and then after the financial crisis, the growth rate actually stayed between 3 to 5% on average. So what are the new drivers of the economy that can actually push the growth rates even higher and at the sustainable rate. And again, as Tim mentioned, if 80% are mostly oil and gas plus minerals, we can see that out of close to 60 billion of exports, the major portion is related to oil and gas. But at the same time, what we see is that over the past 10 or 20 years, the other industries started to picking up, and but still more efforts are required in order to make these products in other industries more sophisticated. So before I go into slightly technical details on the methodology, I just want to bring up this slide of this popular game, Scrabble, although I might not be that good. But what's the idea of this game is that the more letters you have, the more words you can actually make. So if we use the same analogy for the economy, the more the country has in terms of production capabilities, the more production it can, or products it can actually produce. So the idea for the country is to have more so-called letters, especially those letters that can be used in many words, right? Because, and the same thing applies to the economy. If you have production capabilities that can be transferred across the industries, you have higher chance of actually having diversified economy. And there is this concept of product space. So if you take every product that is being produced, and product we mean is goods, if you take every product, you can actually identify interlinks between them. That means it's either human capital can be transferred from one product to another in order to produce a new one, or it's either technology, know-how, all of that. And you can see that if you put all these products in this product space, you see how some of the these products are very much interlinked, while others actually stay a bit isolated. That means they're very much unique in their production. So probably this is an interesting slide. If we elaborate the exported products and see how it is in the product space, we can see it's actually slightly scattered. We can see the oil and gas, the large circle over there, but the products themselves have been scattered across. And the idea is, in order to create, or to so-called to create new product, that means to color one of these white dots into blue or purple. That means it is much easier if you have other colored dots nearby. So the further it is, the longer the jump that we say. That means in order to get, for example, maybe the purple ones means vehicles, right? And the previous slide. The purple ones means vehicles, and the light blue is electronics. So if you're actually producing vehicles, it's still a very long journey to actually achieve and go and start producing electronics. If you are very good in oil and gas, it's even longer jump to actually reach the electronics. So you have to go step by step to cover at least the middle portion, and then go into more sophisticated products. So when we start looking at the Kazakhstan case, what we did is that we understand that there is a large portion of oil and gas exports, and therefore, in order not to have all these recommendations going into oil and gas, since we want to diversify, we wanted to look at the regional level, right? So if you look at the Atyrau region, it's mostly oil and gas. If you look at the Akmola region, you can see it's related to agriculture. If we look to East Kazakhstan, what was it? Metal and mining. And Jambul region is related to uranium. So uranium. So what we try to do, we try to look at the export basket for each region. And what we came to is that we use this algorithm. It's called uniform manifold approximation and projection, that was applied to all the export baskets of each region, and we try to see so-called sort of benchmarking to the global world countries and see how they, to which countries they're close enough. And what we found out is that our regions can be actually segmented into 4 micro regions. But of course, if we take out Almaty and Astana cities, because they have unique structure as well, then we might have 6. So this graph actually shows that in order to, whenever we approach so-called industrial policy, whenever we make industrial policy for the country, we cannot have it at the national level, and having it at the regional level is might be too detailed, and therefore you should have it at macro level. And that way we feel that we have named, we have 6 micro regions. The first one that goes from the east to the west is the industrial belt. The second one is the Caspian region, it's Atral and Mangistau regions. The third one is the northern regions, where they have a lot of agriculture products. And the fourth is the southern regions. And as I mentioned, there are 2 more, which is Almaty and Astana cities. Now, in terms of their complexity, if we look at it as a micro region, we see that Almaty and Astana cities, they're actually, I would say, quite diverse, and they produce sophisticated products. And that's why, again, it explains why actually we try to bring out them separately. But in terms of other micro regions, we see they're actually close to the average maybe, or actually it has it is not that diverse in their export basket. So once we have identified the macro regions, what we try to look at it, and this is a methodology by Harvard Growth Lab, they calculate revealed comparative advantage. So what that means is that you look at the product of the country's total exports. Let's say, for example, it's barley, right? And let's assume barley exports is 2% of Kazakhstan total exports. And then we have share of product in global trade. What it means that how much of barley trade globally, how many percent is actually of the global trade. And if barley exports globally is only 0.1% of the global trade, that means we would be dividing 2%, which is portion of Kazakhstan, over 0.1%, and you'll have a coefficient close to 20, right? In this case it's 16. That means we're actually exporting barley more than the so-called the average country. And we do these calculations for every product, even if we're not producing it. We do it, and later on we have this RCA component, or revealed comparative advantage. It's either more than 1 or less than 1. If it's more than 1, that means Kazakhstan exports more than the average country, and that means we have a comparative advantage. And for this group of products, we call them the existing products, which can be scaled up even further. Now, if the RCA is less than 1, we call them nascent or the new products. Even though we call them new products, it does not mean that we are not producing and exporting it. It's just that we are probably exporting it less than the average country. And that group we call the extensive margins. So we want to extend. And this is the interesting part. So how we score each product is that we go through this methodology. That means we have identified which products has RCA less than 1, that means extensive margin. We remove some irregular products, long jumps, and the score for each product would consist of two parts. First is the attractiveness and the feasibility itself. And for the attractiveness, it consists of 4 blocks. That is product complexity itself. Let's say you're either doing wheat or maybe it's a bread or any other more complex products, right? So for each product you can see their score. And then there is a complexity outlook gain. That means if you produce this product in the future, how many other products you can actually produce if you have this technology or the know-how. The total addressable market, that means if you are producing this product, what is the global demand, and especially those markets that are accessible. And the fourth one is, of course, you look at the resilience to commodity shocks, and by that way you can actually remove less sophisticated products because they are more vulnerable to commodity shocks. Now, in terms of the feasibility, you have the density, the existing presence, so that means by how much you're actually exporting today, and there is a remoteness, resistance to remoteness. That means it is related to the physical delivery of this product, because there are some goods you cannot be transporting it to a very far regions. Now for the intensive one, of course, we remove those blocks that are not relevant, and it consists of, again, 2 blocks, but under attractiveness you do not have the complexity outlook gain, while under feasibility you only have resistance to remoteness because you are already exporting more than the average country. And how the final result would look like. So there would be a list of products which has a 4-digit HS code, right? Standardized HS code for the goods, and we just pick a couple of examples under the industrial belt. What that means is that gas turbines, the production of gas turbines actually has a high score, and when we look at it, we actually see in terms of attractiveness it scores very highly. In terms of feasibility, it's actually close to the average, to the moderate level, and when we look at it, we actually see it's the density. That means once you start producing gas turbines, how further you can actually, what are the other products you can actually go deeper and make more sophisticated. So probably it's closer to the end node, right? While the railway coaches, what we see is that in terms of attractiveness, it has less score, but in terms of feasibility, it has high score. It means it is very much feasible. We just have to properly structure this, bring all the components in place. So these are just a couple of examples, and we have a long list of these. And when I say a long list, we have identified 172 products that can actually help the country diversify, make it more, increase the economic complexity for the country, and provide a strong foundation for sustainable development. And these 172 products are actually can be classified in 29 sub-products and 9 broader categories. Those include chemicals and allied industries, transport, meat, dairy, metals, fruits, vegetables, construction metals, machinery, professional equipment. Now probably you're waiting for the next slides, and what that means is that for each of the macro region, what are the products that we should be pursuing, right? And this consists of 2 groups, as I mentioned, intensive and extensive. Intensive, we are already doing it, we just have to scale it up. In extensive, probably we don't have it or in a very little volume. And for the industrial belt, what we see is that they're mostly transportation and metals, opportunities for nascent or new products around metals, aeronautics, trains, rare earth metals, metal products. In terms of extensive, we see again metal products, that is both steel and precious metals, and we see agricultural products. This is the list. In terms of Caspian region, we see that the products are heavily tilted towards fertilizers and vessels. And in terms of scaling up the existing products, we see again it's around fertilizers, agricultural production, and vessels. The northern region, it's actually look more diverse, and in there again we see transportation, construction materials, cars, processed agricultural products, and those opportunities that can be scaled up largely revolve around agricultural production, which also include machinery and chemical opportunities. So there is a long list of these products. And for the southern region, the most prominent categories for the southern region are raw and agricultural products, as well as the chemicals. And these include chemical products, and you can see it from the list actually. Here is a very long list of products that can actually provide a strong foundation for the sustainable development of each macro region. And again, in the report we have for each of these products under which actual regions or oblasts, right, can be set up and produced. Now, the opportunities identified for Almaty are very well diversified and include several high, complex, sophisticated products. These include pharmaceuticals, measurement equipment, range of construction materials, those that can be scaled up, in other words, intensive. Those include aeronautics, chemicals, machinery, and equipment. Also, for Almaty and Astana cities, what we have done, we're actually able to look at the services that can be scaled up and exported as well. Why we only touched upon the goods and not the services is because services are usually, not all of them first of all tradable, that's one. Second is, even if you look among the tradable services, they are not standardized as compared to the goods. So for the goods, we can actually conduct data-driven analysis without any bias, while for the services, it is quite sophisticated and very difficult to implement. But for Almaty and Astana, we were able to do it. And in terms of services, what we see is that it is high value added services like IT, finance, or creative industries, which is similar to Astana city, I would say. Astana city is also quite diverse. Product recommendations, it includes transportation, machinery, metals, and agricultural products. If we look at the extensive margin products, then we see aeronautics, iron-based construction materials, and agricultural machinery. While if we look at the intensive group, we see these opportunities include lab equipment, trains, plastic products. So for Astana, what I want to mention is that when we look at the tradable service, of course, it also includes IT and financial services. Now, if we look at the existing, this is the existing product space of Kazakhstan that I have shown earlier on. And given the product recommendations, that means that includes 172 products, if the country is able to implement and build all those productions and start exporting, our product space can actually look like this. So these are the new nodes, these are the product recommendations where they actually located it. And I can be just flipping to and fro, and you can see the middle part is actually being covered more. So this actually creates a strong foundation for further diversification. That means if you build these products, you start producing these products, in the 10 years time you conduct another research, and then you can identify another set of products. So on this note, I would like to finish my presentation. Apologies, probably we start late, and then a next section will be coming up soon, so most probably you have questions. That's why we're happy to take questions.
Any questions? Yes, go ahead.
Is your presentation available in some way? You went through a massive amount of information, and there was no time to digest it. So, is there a way that it's available online?
We understand that it has so much information that probably is very difficult to digest, and what we're thinking is that we'll work out with each region of the country, and we'll try to have shorter versions but with more depth in it, and we'll start together with the regional municipalities. No. 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 So we'll be doing it, I mean, when we look at this presentation, many people have even more questions. So in order to make it customer friendly, I would say, right, and to put a lot of information that, as I mentioned, we'll be working out with the local municipalities, and we'll have a list of those projects with more details in it. Not yet.
It's a very comprehensive presentation. I understand you maybe need to kind of, but the question, do you have more practical implication for the regions and for the country? Thank you.
Yeah, so basically there are a few approaches in implementing, in building these kind of new productions. So it is related to, there are two ways, two components, I would say. First is in terms of attracting the investments, right? So you wouldn't be able to start building electronic products with zero knowledge or zero experts today. So what you do, you usually approach top 10, 20 or 30 leading companies in this area, and you try to reach out to them, find who are interested parties, and from them select the one that you can have provide a best conditions for him, right? That's the first part. The second part is related to the implementation itself. So there actually should be different committees in different areas where they actually push through all the barriers, so that the investor does not have to go through these vicious, difficult cycles of getting various permissions. So in practical steps, in short, yeah, this is the way. Mike.
Oh, hello. Okay. My question not exactly about presentation, but about topic in general. I want to ask, we have two stock exchanges in Kazakhstan, KASIE and AIX. And this is kind of a problem because like KASIE get more investments, but on the same time government support AIX, we get international partners, and like in general government support more this stock exchange. Do you see an opportunity in future to combine the stock exchanges so that we will have a strong, sustainable stock exchange, and for international investors it will seem bigger? Yeah, my question, do you see the opportunity so that we can combine the stock market into one stock exchange?
Yeah, perhaps I can answer that question. There's an agreed national financial plan through to 2030, and part of that plan is to develop an integrated securities market, which includes both exchanges and CSDs, so clearing and settlement. But what I would say, and just going back to this presentation, is an integrated securities market is just the precursor to market development. Clearly we need existing businesses to list, either debt or equity. But more importantly, and this is the purpose of this presentation, is to say, in a world where we've got constraints on capital, where we are in competition for investing, how can we work with the regions or businesses within those regions to identify new opportunities? And as Daniel, kind of necessarily apologise for the fact that you go through a lot of information very quickly. But this is a type of analysis which suggests, we have some opportunities for investing in this country which are adjacent to existing industries, and we need to develop those opportunities in order to invest. And whether you raise that money from the public or the private capital market, that's the next step. But the important part here is, we recognise that we need to facilitate offshore investment into the country, either through the public or private capital markets. And these are the types of opportunities that we see as interesting for offshore investors, along with local partners, I would say, given the complexity that's just been explained.
Any more? Any other questions maybe?
Just one final question, perhaps from me. This report, in some ways, a lot like, well, I would say, there's been many reports like this in Kazakhstan over many years. What do you see as the biggest difference between this report and what's gone before it?
So, yeah, thank you for your question. First of all, this report actually uses the latest data, and it actually uses big data analytics. The data was collected from different statistic agencies. We were able to pick out data, seeing from which oblast or region what kind of product is being exported to another region. As an example, from Aktobe region, there is some product is being produced and is being exported to Shymkent city, for example. And we could see all these flows. So it's not just the exports that are being products that are being exported overseas to other countries, but it's also internal exports as well. So that was helped us to identify these macro regions. Why they have been grouped into these macro regions is because in the future, these products, if you actually produce one product in Aktobe region, the same product can be used as an input, for example, in the East Kazakhstan, where you produce another product, or they complement each other. And it's much easier to transfer technology and knowledge. So this is the idea behind this whole methodology. It uses know-how transfer, technology transfer, and another part, as I mentioned, is very relevant. And the third one is we're at this stage where there is a fight for capital and globally, and that's why we have to put more efforts and try to implement these recommendations and actually go further in this economic complexity. So answering your question, probably in the previous years we maybe relied on to a certain extent on oil exports, but now if we want to diversify, and not just diversify, but make more sophisticated products, so this is the very relevant, very current results. I hope you answered your question.
If I may, one more question. I have the microphone already. My name is Eric Livni, EBRD. I come from Israel, and in Israel, in 2021, I just happened to have this number. Israel exported some $50 billion worth of IT products and services. Not heavy stuff, not stuff that has to be transported via air or rail, but something that doesn't occupy space. Basically, the product of our brain power. In 2021, Kazakhstan exported about the same value of oil, 50 billion. I wonder, how do you fare your analysis on getting into the space of IT, creative industries, and so on and so forth? I mean, are we forever going to be stuck on agricultural products, or there is hope?
There is a hope, and there is a high chances, I would say. So this analysis actually covers only goods, right, and not service. As I mentioned, the services are usually not homogeneous as compared to the goods. So goods can be standardized. In terms of services, we try to look at the Astana and Almaty cities, where actually you have a lot of tradable services, and in there we actually see that IT, finance, and creative industries, they have a huge potential. I mean, we are already exporting these services, and we have strong foundation in both cities, and we can actually grow it further. I think this is very impressive, where country can export, like as you mentioned, Israel, for 50 billion, and this is just the IT service or consulting maybe, or any other services. We also know, like for example, Korea actually exports also a lot of these products from creative industries, right? There are movies, music, etc., etc. And these are very little, I would say, less labor-intensive industries, where you actually use your brain power. And this has the intellectual property. So we're working in this area, but answering your question, this report only covers goods. But we know these certain services that we're targeting. And that's why AFC was created, to actually go to diversify, having not just banking heavily relied financial sector, but also alternative like capital markets, Islamic finance, asset management, fintech. So all of them are there. Thank you for your question.
Thank you very much, everyone, and enjoy the rest of your afternoon.